All right, financial math classes. Today we're talking about state income tax. The last lesson we dealt with federal income tax, which is taxes at the national level. So we're moving down to state income tax and how the income tax works for each state. Something to keep in mind, this is generally the same from state to state, how this is calculated, but the tax rate is going to be different depending on how much money you make and what state you live in. So this is just a generalization. So most states require employers to withhold a certain amount of pay for income tax. In some states, the tax withheld is a percent of taxable wages. Your taxable wages depend on exemptions or withholding allowances, which allow for supporting yourself, your spouse, and others in your family who are your dependents. So what an exemption is, you claim an exemption, that it's like that money is set aside and it's not taxable. So the more exemptions you claim, the more money that is not taxable. However, if you claim those exemptions during a paycheck, you'll have to pay more taxes at the end of the year. So if you have fewer exemptions, you end up getting a larger tax return at the end of the year. So how this works, so we have Tony, whose gross pay as a landscape designer is $44,000, $44,750 a year. The state income tax rate is 3% of taxable wages. He takes an exemption for himself and an exemption for his child. How much does Tony's employer withhold yearly from his gross earnings for state income tax? Use the exemptions from the table. So a single person can withhold $2,000 for themselves as a $2,000 exemption. If you're married and you want to claim that, you can exempt $4,000, and then each dependent, so child or someone else that depends on your income. So the annual gross pay, so the exemptions, he takes an exemption for himself and his child is an important thing. So this here is going to tell us how his exemption. So $2,000 for himself and then $2,000 for his child, meaning $4,000 total. So to find his taxable wages, I'm going to take his annual gross pay, so $44,750 minus the total exemptions, which was $4,000. So his taxable income is $40,750. Now, his tax rate is 3%. So whenever we have a percent, we're going to do calculations with that. We have to convert it to a decimal. So I'm going to do 3% divided by 100 to convert it to a decimal. That's 0.03. So to figure out how much tax is taken out of his paycheck, I'm going to take his taxable wages, which was the $40,750, times his tax rate, which is 0.03. So 40,750 times 0.03 comes out to $1,222.50. So that is how much he is taxed each year. All right, let's do one more example. So, gross pay, $23,760, married with 3 dependents, and the state income tax rate is 4%. So let's figure out, so we want to figure out the taxable wage. So we have to do the exemptions. So it's going to be his gross pay, $23,760, minus the exemptions. So married is $4,000, with 3 dependents is $2,000, but we're going to do that times 3. So 2,000 times 3 is 6,000, plus the 4,000. So that is $10,000 of exemptions. So the taxable income, that's not taxable wage, taxable income is $13,760. All right, so with that, now you're going to figure out the state income tax using the rate. You're gonna just call it the SIT for state income tax. So so you take the taxable income, so 13,760 times the rate. So I need to change, whenever you're doing a calculation, you need to change the percent to a decimal. So 4% divided by 100, to convert it to a decimal, is 0.04. So 13,760 times 0.04. That comes out to $550.50. Excuse me, 40 cents. So that is how you calculate state income tax. Your assignment is a worksheet. You can find it in Google Classroom. If you have any questions, let me know. Give me an email. Other than that, we are done, and we will see you next time.